Hello everyone, how's everyone doing? So today we're going to be doing a outlook on the week of July 8th, 2024. I made a video 2 weeks ago doing an outlook and I said I was going to do one every single Sunday, but I've been really busy these past 2 weeks. So yeah, and my time has been freed up. So I'm going to get back to doing outlooks and I promise I'm going to do them every single Sunday or the end of weeks. So Friday or Saturday morning. So yeah, and by the way, I switched from Microsoft OneNote to Notion since lots of people use it, and honestly, I've been liking the interface way more. So yeah, let's get into the Outlook. Okay, so first thing I wanna go over is actually the economic calendar. So Monday will is a no news Monday, and I don't like when Monday has no news and the next day has like really crazy news, because often if that's the case, if Monday has no news and the next day is like CPI or PPI or Powell testifying or speaking or whatever, Monday will usually be in a range expansion consolidation day. So Monday, I'm not going to be trading Monday, just going to be tape reading, check scenarios, just looking at what price does, even though it's most likely going to be a consolidation day. So Tuesday, Petya Powell testifies, 10 a.m. Anything after 10 a.m. will be completely fine. I'll be looking for my setups after 10 a.m. Same thing goes for Wednesday. Thursday, I have my eye on because of this. Unemployment claims are registered for basically the best price action, especially when it's at 8:30. I think it's always at 8:30. Yeah. So anyway, CPI plus unemployment claims is going to be the best price action for the whole week. That's probably going to be the biggest day of the week. So I'll be definitely trading this day. And then on Friday, PPI, I'll be trading after 8:30. 10 a.m. I'll watch out, but I'm sure this won't be crazy volatile. So I'll be looking for trades after 8:30 a.m. So yeah, that's it for the economic calendar. Monday will be more trading, just tapering in scenarios. However, there's still looks great on register for great price action. Okay, so let's go into the weekly outlook. Okay, so what I want to first get into is how previously last week, like late last week, we broke into all-time highs again, and whoever like speaks to me on like whatever, whoever I speak to about trading, I mentioned that I'm not convinced that this is all-time high. Um, this move here was honestly, it seemed like it was just a fake out to me, and I'm pretty sure I have a screenshot on OneNote for the outlook of previous week. Let me take a look. EOD. Yep, found it. Okay, so I'm gonna paste this down here so everyone can see it. Here it is. This was my outlook for. I mean, this was my outlook. This was my outlook 2 weeks ago. Yeah, and I wasn't convinced that it was all-time highs. We've been retracing and pushing higher basically for the past 2 months. So why would this be any different? So yeah, just taking out relative equal lows, MMSM, and then into this weekly BISI, and then we inverse this daily SIBI, and then we go higher. And that is what happened on the daily time frame. So let me just take a look. Yeah, so this was the daily BISI that I was looking to be inversed. We inverse it, and then we see higher prices. And I'll get into all of this talk in a second. So let me just delete this. Okay, Okay, so broke all-time highs last week. I have price conditions set. So let me go into this picture again. So you can see we have many arrays after breaking these all-time highs. So we got to pay attention to this turtle swoop right here. So this turtle swoop really sets the order flow for a couple of days since the turtle swoop, and you can see that we barely close below it. And we leave behind a breaker and a mitigation block and a move off of the weekly imbalance. So we break previous range, and usually when we break previous ranges, we retrace back into equilibrium of the range into some kind of array. So the price condition I have set is basically if we can show signs of change of delivery and daily inversion, or a 12-hour one off the mitigation and the breaker, and discount or whatever range we create, then I expect higher price until prices otherwise. So what I basically said is that I want to return into this previous range equilibrium. So like this, into this arrays, and I'll reassess, I'll look for changes in state of delivery for inversions if we are willing to see higher prices. So basically my condition is that basically no matter what, I'm anticipating, I'm not saying I'm sure we will get one, I'm anticipating if we don't get one, that's completely fine. If price wants to move back here, this is what I'm going to anticipate. Price moving down back here, I'm going to reassess on lower time frames. If this is daily, then I'm going to reassess on the maybe 4-hour, maybe 8-hour, 12-hour. I'll look for inversions and for changes in the delivery, and that will kind of set the stage for higher prices until the next premium array of the move down. So yeah, but what I'm pretty much guaranteeing at the beginning is a move lower into previous range discount into that breaker before we see higher prices. Or if we just completely disrespect those price conditions, then I'll anticipate lower prices. So as I said, once we're here, I'll reassess for changes to delivery or inversions. If we don't get that, then I'll see lower prices. If we do get changes to delivery and inversions, then I'll see new all-time highs. Again, this all depends on the reassessment from how we move off the price series. So yeah, as we move into here, I'll reassess here. I'm pretty confident with this move lower. The reassessment begins when we mitigate those price ranges. If we can move lower and mitigate those price levels, then I will be on the lookout for changes in state of delivery, inversions or market shifts that will help reassess in which way we are going to behave around those price areas. So you always want to have a if this, then that condition when going to the marketplace so you do not marry a bias. I'm very against the actual word of a bias. What I think you should always have is a draw on liquidity, a price level where price is most likely to be magnetized towards. I don't believe if you just go look at the higher time frame and see that we're trending up, then say, okay, I'm gonna have a bullish bias, like how many people teach. What I believe is that you look for possible retracements. When those retracements begin, then they begin. And you can short into the retracements and you can even long from the retracements. But you do not want to be going in here and then keep longing and longing. It might work for you once or twice or 3 times. But the time where we retrace, you get destroyed. So as traders, we want consistency. We don't want luck. We want to have our price conditions precise and calculated. So it's gonna be a pretty short video today, just going over the week outlook, and I'll update the EAOD on this week's end, and you'll also get the next week's EOD with that video. Oh, and I forgot to mention, I'm expecting the big expansion into these arrays to be on either Tuesday to Wednesday, and the move that will determine if we disrespect it or if we continue higher for new all-time highs will probably be on Thursday because of that PPI and those unemployment claims. And Friday, I expect it to continue higher into more premium rates. So yeah, just a short video, just going over the weekly outlook. I hope you guys like this new Notion template other than OneNote one, because the OneNote one was really dark. It was hard to bring out messages and to zoom into pictures like this. So yeah, I'm really enjoying the Notion template. Yeah, okay. So I hope you guys enjoyed this video, and I'll see you guys next week or whenever.